Yeah, how you doing?
Oh, just another day. Been
I
working a lot. Huh?
I said I hear you. I've got like 10 construction workers at my house right now, and I'll listen at 1:30. Everybody, shh.
I know. I told the kids, I'm like, okay, I need everybody to be quiet.
Yeah.
Hey everybody, this is Tatyana Sturm with the Storck team and Exit Realty Denver Tech Center. I have been getting a lot of questions over the last couple weeks, mainly about forbearance. What is it? How does it affect me as a homeowner? I'm thinking about doing it. What can I expect? And I've had a lot of conversations with a lot of people out there, but a person that I want to introduce you to, we go back to the crash of 2008. Some of you may know that I dealt a lot in the short sale world back in 8, 9, 10, 11, 12, probably at least well over 400 short sales in my career. And the person that had helped me with a lot of those short sales and negotiating those with the bank is Lyonel Katz. So I have him here today. His company is ACG, Absolute Consulting Group. They're based out of Los Angeles, California. And he has been part owner in that company for 13 years, um, advocating for homeowners. He's helped thousands of homeowners when it has come to avoiding foreclosure, negotiating short sales, and negotiating loan modifications, uh, liens against property in addition to first mortgage. It could be second mortgage, creditors, HOAs, has a lot of experience in that. So it was just natural that I reach out to him so that he can share with you what he has learned about forbearance and a lot of his knowledge from the past years and in his experience and his company just moves forward into what we're talking about today on the topic of forbearance. So, just a little bit quick information about forbearance. The CARES Act was put into place on March 18th. What that does is it puts foreclosures on hold for at least up to 60 days, and it gives homeowners the option of going into a forbearance program, which means your mortgage payments are put on hold. That could be 90 days, 180 days. We're going to talk about that a little bit. But these are specifically, the CARES Act is specifically for federal backed loans. And so we're going to talk about a little bit more too, how if your loan's not a federally backed loan, and that federally backed loan is going to be FHA, VA, Fannie Mae, Freddie Mac loans, USDA loans, those type of loans. So let's go into a little bit of a conversation, Lyonel, when we're talking about the length of forbearance. So when we were doing our research, we read that right now we're looking at forbearance programs can be now up to 6 months, but the homeowners that I've been talking to have been offered 90 days at the most, is what I've
Right.
been having conversations with homeowners about.
Right. And by the way, Tatiana, thanks for having me on. It's been a pleasure always working with you. Um, Basically, you're correct. The 180 days is pretty much the way they refer to it is an up to 180 days. So if you're a homeowner and you're wondering, okay, if I apply for one of these forbearance plans, how long are they going to give me? And the rule of thumb is that the maximum they can give anybody right off the bat is 180 days. It doesn't mean that they can't extend a forbearance. Like if your question is, hey, what am I going to do after, right? I can't pay a lump sum payment or whatever it may be. That's a whole nother topic. But the key word is that I believe the CARES Act has the phrase up to 180 days. So with that being said, most of the lenders are giving actually, I want to say 90 days. And that is their initial sort of forbearance that they're giving as let's just call it even a test to see if the hardship is only 90 days, then they only want to give you 90 days. And then you can apply for an extension or another workout option.
Okay. So there. it can be an extension in a forbearance program with the servicing company.
Correct. Actually, in fact, with this whole COVID pandemic situation, technically the amount of extensions they can give you is there's no limit, right? It's an unlimited amount of extensions they can give your forbearance plan. However, the forbearance cannot go longer than any 12-month period, right? So if that's for an example, like if somebody was only to get a 1 month forbearance plan or a 2 month forbearance plan, the lenders are still allowed to extend you up to a 12-month period. And that could be through 1 extension, 2 extensions, 4 extensions. The amount of extensions aren't limited, but the overall time frame of forbearance is, if that makes sense.
Okay. So if somebody got 2 forbearance programs, each 6 months long, then the maximum would be a year as of now.
Correct.
That they could have in forbearance.
Correct.
Okay. So I think it's going to be one of the questions and that has come up with a lot of people is understanding how these payments that people are not making for a certain period of time, how those have to be paid back and what that looks like. So forbearance does not mean mortgage forgiveness, correct?
Correct.
So any payment that's not made has to be paid back at some point in time. And that is up to the servicing company to decide how that
right.
is going to happen.
To a certain extent, I mean, first and foremost, anybody considering a forbearance plan, these are unsettling times. Please don't just miss your payments. Call your loan servicer, talk to them about all of the options that they're going to be presenting you with, and ask about the before, during, and after that they are going to be offering, right? Because there's general guidelines that are put out by Fannie Mae and Freddie Mac and FHA, Housing and Urban Development. And then obviously everybody else can put some level of spin on it. So to kind of answer your question, what I believe is taking place right now is that these forbearance plans are being automatically approved with little to minimal sort of documentation so that they don't slow down the process, and that automatically in 90 days you have to make those 3 payments that were supposedly put into the forbearance plan. You have to pay all those at one time, right? And then it's up to you to say, okay, am I going to extend this and add more payments to it, or am I going to start applying for a loan modification or what's known as a repayment plan? Because there is a difference between a forbearance plan and a repayment plan. And the forbearance plan is kind of like, listen, I'm not going to make payments, or I'm going to make reduced payments for a certain period of time. And then the repayment plan is all of those payments that I didn't make or that I fell behind on. Now we're going to put together a payment schedule that allows me to pay that back, right? And then even for FHA loans, so a lot of people have FHA loans, they actually make up a considerable amount of mortgages in forbearance. They're doing what's called partial claims. And so you can actually put that as a second lien, or what many refer to as a silent second. They'll take that for those payments in the forbearance plan. They'll actually record it against the property for you to pay at another point in time, whether it be at the maturity date or when you sell the home or at a time that you can pay it.
But that is, as of right now, what we know, only for FHA loans.
The partial claim, yes, that only at this point in time applies to FHA loans. And for everybody else, it's really just, are you going to do a repayment plan, paying a lump sum, do a loan modification, one of those sort of general, I guess you could say traditional sort of foreclosure alternatives.
Okay, so that's really important for people to know. If you have an FHA loan and you're considering forbearance, to me, that makes coming out of the forbearance program, knowing that the investor or FHA is going to give you extra time, or you can pay that back at a later time, or it might be a silent second against the property, right, that at the end of the 90-day period, the homeowner does not have to pay all 3 mortgage payments back all at one time.
Correct. That's what they're aiming for. They haven't released, or I haven't seen any guidelines for what review needs to take place in order to allow that to take place. We don't know, maybe 90 days from now what could happen, because I think that they haven't came out with all of the aspects of their programs yet. So what's going to end up most likely happening is they might streamline modifications and see how that works. It just really depends. So we'll have to be more vigilant in watching what these servicers end up doing, whether if it's FHA or just a general government-sponsored enterprise GSE like Fannie Mae or Freddie Mac, or even privately owned. We'll have to kind of see who leads a little bit of the curve on that. But FHA, yes, there is a chance that they could take those 3 payments or those 6 payments and just literally just remove it technically from the loan. Maybe I'm not saying that correctly, and record a silent second that wouldn't have any interest bearing on it, and you just pay it another time.
Okay. Okay. I think that's a really important information to know.
Right.
And again, know what type of loan you have. That's
Oh,
going
yeah.
to be really important. I don't want to get into this too much or spend too much time, because I think it's a little bit more on the technical side when we talk about the loan. But if you could just touch a little bit on, forbearance is in place because of what's going on right now. People being, the hardship of what's happening, and then, piling everything on top, having to stay at home, maybe not working, not knowing, when people can get back to work. So it does take some stress off of people, especially when they have other bills in place, to go through this forbearance program. But what does it look like, just like a bird's eye view from the servicing and the investor? Like, how does that affect when these forbearance programs are put in place? What is the bank going through?
Right. That's actually a really good point. And this is something that's really being reported on almost never. But for a lot of these Fannie Mae and Freddie Mac loans, especially FHA, the lenders right now actually still have to keep making payments on these loans to bondholders. And I think I saw a report that CNBC put out that right now there's about 2.9 billion in mortgage payments that the servicers are having to make on behalf of borrowers that are in forbearance plans. So this is even a whole nother topic, right, from an economic standpoint of what this means long-term for mortgage holders, on the we're talking about on the secondary market investors, as well as these actual servicers that at this point in time, many of them are just, I mean, for lack of a better term, they're bleeding money monthly.
Okay. Okay.
Yeah.
So just take me through a brief, what is the process like for a homeowner that wants to go, do forbearance right now? What are some of the things that they should be doing from the very beginning and be looking out for?
Right. I'll go through some of them, and I know you and I spoke about some of them. And so let me know if you feel like I'm forgetting anything. But first things first, it seems that what we've been able to see is that the lenders are trying to make it as easy as possible to get a forbearance plan, right? They're not requiring paperwork in most cases. You can apply by phone. Several of the servicers are also even allow you to apply through your online portal, right, where you may make your mortgage payments online. So if you don't have that, you might want to actually register and make one. Reason being is that we're hearing about longer hold times. I think the other day we had someone on our team who was on one bank call and they were on hold for like an hour and a half, right? Because they're getting over inundated. I mean, millions and millions of loans right now are applying for forbearance. And so you don't want to put this off. If a forbearance plan is right for you, you do want to get started on it as soon as possible, because one of the things, and this is a little bit of a tangent, but many of the programs state that if you're in a forbearance plan, there will be no negative credit reporting. And so if you're not in a forbearance plan, though, they haven't said that, hey, if you just stop paying, we're not going to report. I think the key is that you have to get into a forbearance plan and be on the same page with your lender on why you're not paying rather than just stopping, right? But once you get one of these plans approved, traditionally they'll send it to you in writing, just like any other sort of plan that they would be offering you. And the key is to review this, right? You want to read it, ask questions, find out if they are going to require you to pay in a lump sum, or are they going to offer you different options. You want to ask about their policies with extensions. What are they going to require in order to review an extension, or if those are also being granted in the same manner as the forbearance. Those are the initial things you want to look at. I've seen a little bit of controversial information regarding what type of reporting will go into effect with credit bureaus, because I know that I have seen certain servicers saying they won't report absolutely any late or anything out of the norm. And then I've also seen other material that also states, right, this one right here that you just pulled up, that even states on the right-hand corner there under reporting, right? And that here, I'm going to pull it up on this other screen. It states there that they are going to be doing some reporting on reason for default, and they even list a code for it, stating that it's a national emergency declaration for the reason for it. And that translates, I think we also discussed that someone I had heard of that did a forbearance plan and then was trying to do a refinance, and the forbearance plan got in the way of them being able to do their other refinances. So those are also things you want to be thinking about as far as your financial blueprint. What are the things you want to get done before you enter into a plan that could signal to any level of a creditor that there's a hardship?
And so the other thing too is if you are in a forbearance program, I think it's going to be really important to touch on this with the credit, is you want to be making sure that you're looking at your account diligently online, looking at your statements, monitoring your credits, okay? Because keep in mind, these banks right now, they are overrun. I read of a story, somebody was on the hold for almost 4 hours with their particular servicing company. And that's granted not every servicing company, but finally they just hung up and sent an email in. But these banks are not equipped right now to handle what has been going on and transpiring over the last 3 or 4 weeks. I mean, this has literally happened overnight. And so the banks are just trying to wrap their processes around this. And I'm sure a lot of servicing companies don't even have like a a certain set process in place. I mean, I'm sure you might talk to somebody that has the same exact servicing company, but maybe they've gotten 2 different stories or 2 different plans. And then the other section here, so we talk about this reporting. So they can go into your credit and do certain reporting according to this Freddie Mac document here that we pulled offline. But we don't know, down the road how a mortgage company is going to be looking at this when somebody goes to get a loan. Let's say, they want to get a loan or refinance 6 months or a year from now, and they went through forbearance, and let's say they made their lump sum payment back to the bank on month 4, and now we're a year later and they want to refinance. Can they? I mean, is the bank going to go back and look at this and say, hey, because you did a forbearance and we see this on your credit, we decided we can't lend to you for 2 years, like a mortgage payment or something.
Right. And so the recommendation would definitely be to monitor your credit, right? And understand the policies, right? So if you are in a place where you're going to go ahead and you're in a forbearance plan, ask clarifying questions, understand who you're speaking with, try to speak to a manager, confirm who it is, make sure you take notes as well, right? I mean, we both know that in this business, I mean, who you spoke to, what their employee ID is. Unfortunately, these are things that many times are needed later when you go back and you find out that, a mortgage servicer that was servicing millions of loans let some of the people or borrowers, better said, that weren't supposed to receive negative credit reporting, well, they did. And so you might need to make sure that you're watching that. And I definitely recommend that. You,
Yeah,
yeah,
I do too. I think you need to watch your credit because I just see that, like I said, the banks are overrun. They don't have the staff, they don't have the processes in place, and mistakes are going to happen. I think people are going to get late payments reported on their credit, and then they're going to be in a situation where, they're going to be fighting an uphill battle for, some time to get that taken off their credit.
right. Right. And hopefully not. I hope for the best. I would love to give the lenders the benefit of the doubt. But obviously, having dealt with this in very high volume since 2006, 2007, time and time again, I've seen them not be able to manage the amount of the influx of new style or new departments they need to build and new procedures that need to be developed, new team members that need to be trained on those new procedures. So we'll see kind of a little bit of what the fallout is on that. That's going to be interesting to see, and I'm really hoping for the best because that really affects families and so forth with small things like credit cards, car loans,
Mm-hmm.
student loans, you name it.
So I'm gonna this was just gives people an example here of a forbearance payment plan. So here you can see forbearance on this particular little example that we pulled out. You have April, May, June's payments deferred, right? And then here they are requiring a balloon payment on July 1st of this amount of money, almost $9,000.
Yeah.
So, if you get to this point and let's say you're not able to make back this payment here in one lump sum, then the options with your bank will be if they extend the forbearance program. Is that correct? Or
Ideally, yeah. If you have a continued hardship, you most likely want to be in a position where you're going to either extend or engage in understanding, listen, I can't make this lump sum payment. What are my other options? And typically, historically, right, because I can't speak on behalf of any servicer, investor, you name it, there will be some level of options for a repayment plan, loan modification, principal deferrals. These are different things that are options historically to resolve situations like this, because this is not the first time that lenders have dealt with forbearance plans, right? Let's keep that in mind. Forbearance plans have been around for a very long time. It's just probably one of the first times in history where literally you pick up the phone and say, help me. And more likely than not, they're just giving you a forbearance plan without actually asking for a full package. Normally, previously, these were only approved upon completing an application, submitting proof of a hardship, pay stubs, tax returns, you name it, right? There was a full process to getting these done. And so now the difference is really this. So coming out of this, really a lot of the traditional programs will still be available. And my question, right, as someone who's been dealing with this is, well, if they made it so easy to get a forbearance plan, are they going to make it just as easy to get the other options? That's what's unknown.
okay, and so um, something to be mindful of, and we could go on about this for a long period of time
Oh, yes.
based off the number of transactions we've done and stories and situations with different servicing companies. And keep in mind, there are servicing companies that are much better than others.
Yeah.
We know this to be true, very true, from the short sale days. But if somebody, and again, I'm using this example, somebody, let's say, lost their job and they're unsure about when they're going to, be able to be employed, and they're in the forbearance program, and let's say they need to go, this is their example, and let's say they need to go another 3 months, and they're doing the best that they can, but now they're at the end of the 6 months, and if the servicing company doesn't grant the extension, okay, because let's say it's not a federally backed loan, because about 60% of the loans in the US are federally backed and 40% are not. So the 40% that are not federally backed does not necessarily have to follow the guidelines of the CARES Act. Okay. At that point in time, the homeowner would try to do a loan modification, but
Correct.
if they need to qualify for that, correct?
Right. That's what I'm saying is kind of that question mark that's like, okay, so the first band-aid, right, on the gaping economic wound in the household is this, one size fits all pill that's like, okay, forbearance plan for you, forbearance plan for you, forbearance plan for you. And then all of a sudden it's like, okay, well, now let's go 90 days down the road. We know that the forbearance plans were part of the CARES Act. We know that they were allowed to extend it for up to a year. We know certain things, but what's unclear is kind of what's the next qualification for what actually gets you out of this, right? And that could be a loan modification, right? Or it will be a loan modification or a repayment plan or a principal deferral. The qualifications are what's the question mark. But historically, you've had to have some level of resolution to your hardship and have qualifying income as well as expenses, and that there was really behind the scenes a whole algorithm, right? So many people would just apply, you know, from 2007 to even still these days, people just apply. They don't look at their numbers. They don't understand that what they really were doing at that time was requalifying for a mortgage, just like what your lender does when he's qualifying you in the beginning and looking at all of your numbers. So that what's going to get people out of this to me is not necessarily a mystery, but the guidelines and the milestones that they'll have to meet, I think, will come out in the next 45 to 60 days, because we're really already, if you jumped on a forbearance plan immediately, there's a chance that you're already in one, like what you were sharing from April 1st.
Right. So I have one question that came through. So if you have questions, please post them and we can try to answer those as best as we can. But one of the questions is, can you sell your house while you're in the forbearance period? I believe, yes, you can. It would be just getting a total payoff from your servicing company. So they would take what your initial payoff was and then probably add those missed payments to your payoff. But you certainly, I mean, I haven't personally came across that in the last 45 days, but I don't think that there would be a problem selling your house.
Correct. I don't anticipate there being any issues either. I mean, they would just more than likely just alter your payoff to just add whatever is due up until that point. I don't think you would even be forced necessarily to pay that lump sum if it's not even funds that are owed, just to take it a step deeper. Because if you're on a forbearance plan for 90 days, and if you sell on the 45th day, then technically inside of your forbearance plan, there's funds that you don't owe, if that makes sense.
Yeah,
Right.
no,
So
right.
you wouldn't take that 8,000 and add it. It would be whatever prorated amount based on, your amortization schedule or what is being added as far as interest on a daily at a daily rate.
Mm-hmm. So, I think the overall, we're wrapping up, or a little bit over 30 minutes, but make sure you know what type of loan you have. You don't know if you have a federally backed loan. Get your forbearance program in writing and have a really good understanding of that. And if you don't, we would be more happy, we'd be happy to review that program with you. Know that there definitely are going to be some credit implications from this if you go through forbearance, and I don't know what that is going to look like in the future for people.
And we don't know who's going to follow what, right? So I think knowledge is power, and understanding that that's a little bit of a coin flip is just something that should be acknowledged, right? Because if you need a forbearance plan, there's really no way out of it, but understanding as much as you can will empower you a little bit more to not be surprised down the road.
Right.
Because if you know the full story, you might say, you know what, I might as well sell now, get my equity now. I'll be able to rent. I don't have to deal with any of this, right? Because everybody is going to have different priorities. Some people say, hey, if that's going to go on my credit, I might as well just sell. I don't really love the house, right? Or some people say, you know what, no way. It doesn't even matter if you demolish my credit. I'm staying put. There's no way I'm moving right now. So I think that because each individual borrower and homeowner is going to know what they value most, right? What they're going to prioritize in the household. And if they know all of the information, then at that point in time, they can actually prioritize whatever their priorities are rather than finding themselves somewhere and saying, well, if I knew this, I would have taken a different action.
Right. Well, and one of the things that I'm fearful of seeing down the road, and this is something I'm just thinking 6 months to a year down the road is, we have high unemployment, and there's a lot of uncertainty in the future and with jobs. And if you do find yourself in a forbearance program, and let's say 6 months go by or a year go by, and now those payments have accumulated, and I don't know, the bank may not, they may say, okay, we will try a loan modification program, and maybe this is going to work. And let's say you try to go through the loan modification, and 60, 90 days. I mean, I know we've had our fair share of going through those, and some go through, some don't. I mean, it's very difficult to get those pushed through at the bank. It's going to be really important that you watch how your bank's, reporting. And, I'm fearful that some people might find them in a situation where, they may find that they're facing some sort of pre-foreclosure with their servicing company. And if that's the case, based off our experience, you want to take action on that right away, because the closer you get to that sale date, once the notice of election and demands filed, it becomes harder for people like us to help you either, get out of that situation or negotiate things with the bank. So it's really important to stay on top of those things.
Agreed. I mean, definitely you want to be ahead of the curve.
Mm-hmm.
I mean, because time flies and these things one of the issues is that a lot of people miss one payment or whatever it may be. It's an avalanche situation, right? It's a snowball effect. And before you know it, you're in a place where, okay, now it's 3 months turn into 6 months, and so on and so forth. And now it's the end of the year. And in the CARES Act, if you do look it up, there are certain limitations where it's until the end of the year. And some people may have hardships that came from this that are longer than the end of the year or whatever arbitrary deadline is for the programs that are currently available and so forth, and as far as the pandemic goes.
All right. Well, is there anything else that you want to touch on, or?
No, maybe what we can do is if anybody would like, maybe has any questions or would like to run a scenario, maybe we can even come out, Tatyana, with a little bit of a checklist of things to know, what areas you kind of want to look into, obviously including but not limited to those, right? When you call your lender, maybe you and I can work on it if anybody is looking for something like that, and we can kind of give that out to homeowners who are actually considering this, and we can help them maybe find a little bit of information that can help them determine what's the right path for them.
Right. And I'll post the link too for this forbearance plan from Freddie Mac. It's kind of just a little bit of it's some good information and kind of breaks everything down. That was this particular form right here. So okay. I'm going to go ahead and post that.
And I'll send you a few other things as well that maybe we can kind of put together.
Okay. So I just posted that. If anybody wants to download that, I think it gives some good basic information about the forbearance plan. But again, nothing still, I mean, servicing companies are all different. I had a client and they had to pay their forbearance. They had to make all their balloon payment on month 4. And then their daughter, their servicing company was going to work with her on a payment plan on month 4 for, is what she told me anyways, for as little as $100 a month. So that's quite a difference between, on month 4, what somebody can do and can't do. If you either got to pay 10 grand, or you can, hey, I can pay you $200 a month on top of my mortgage payment. I mean, that's pretty manageable, right? So
Right, right. And that's really what the repayment option would look like. Just depends how long they extend it and so forth. It's really about kind of taking the amount that's owed, dividing it over an agreed amount of payments over, monthly, whether it's 12 months, 24 months, 36 months. So there will be options that are available. I don't want anybody to feel like there won't be options. It's just what's unclear is the magnitude of what it'll take to qualify for certain things, and are they going to set the bar high or low in order to get these options. And I think that they will be probably on the kinder side, because I don't think anybody wants to see another economic or a further economic meltdown on the mortgage side of things. So I do think that they will be somewhat lenient, but again, it depends on who's the judge of what's lenient and what's not lenient. Right. I mean, I know for a fact that I know of hundreds, if not thousands of people that got loan modifications in the mortgage crisis that started in 2007, 2008, and they did not like their payments. There were plenty of people that were like, oh, I thought my payment's supposed to go down. And it's like, that's not what it means. So some people I think will get different payment plans or repayment plans or principal deferrals or the partial claims like we said, and some will be more preferable than others. And maybe we can do, as those come out, we can do a follow-up video to kind of discuss what some of those options look like.
Okay. Yeah, I think that will be great, because again, we're still a little bit unsure of how this is all going to shake out. Right. But I think, 30 days, 60 days from now, we'll have some more information for everybody and more scenarios that we can share with people of what, how things are shaking out and looking.
Definitely.
It's one of those things. I mean, it's like week by week, it's different all the time, what we can do and what we can't do as real estate agents.
Oh yeah. 100%. And that goes across the board, from lenders, real estate agents, homeowners. I mean, things have been changing daily, sometimes weekly. It's interesting times, to say the least.
All right. Well, I really appreciate your time and sharing your expertise with everybody. And it's always good to catch up. Funny story. So I'll just end on this note, but maybe I'll let you tell it, but it made me laugh.
Oh yeah. I was telling you how, so we've been working together for what, 10 plus years, right? Yeah. Like maybe 13 years. And I think, I don't know, maybe it was 08, 09, was it?
In 10. My son was born in
10. Okay. And Tatyana was always, you're one of the hardest working agents. Like, you had no off button, and you probably still don't. But maybe you've got, like, the thing is that one day I think your water had broken. Okay. And you had so many clients that you were helping.
I think I had like 50 or 60 short sales at the time.
It was crazy. We were going crazy. There were so many things to do on a daily basis just for your clients. And, we were like, oh gosh, we need all of these things. But you know what? Don't bother Tatyana, because she is on her way to give birth. Okay. And it's like, don't bug somebody who's about to give birth about, like, hey, can you get me these documents or something? Like, it's like, now's not the time. But I remembered being so surprised because you kept emailing us when you were, like, literally on your way to give birth, that we were like, stop it. Just stop it. Go have a baby and just. But you're seriously just so dedicated that I remember, like, that was just yesterday. because
I
I
know.
don't.
It
I
was
think you are the one and only. I've never had anybody who's like literally like I'm on my way to have a baby right now,
But let me
and
tell you
I'll get
that.
you, let me get you that real quick, okay? It's good times.
That was a good laugh the other day. So
Oh yeah,
it's crazy that's been 10 years. So
time
time flies,
flies.
certainly. Well, okay. Well, we'll work on this and we'll see how things shake out over the next couple of weeks and plan on doing another video and have some of this information to share. And I think the checklist is a great idea. So we'll work on that and get it out to you all. So
You got it. Thanks for having me.
okay, thanks, Lionel. Talk
All
to you
right,
later. Bye,
bye.
everyone.